Good morning. It is glorious Wednesday, June 18th. I'm Zach Howard. Here's your morning market update. What are we looking at in the notebook? Talked about volatility yesterday as it relates to NASDAQ and those high beta equity trades. We are looking at here a chart of the volatility of oil, the global energy price, okay? OVX is the ticker on this volatility reading. And sometimes volatility can crack up, boom, as the price goes up. That's what we're seeing here with tensions, geopolitical, and that Middle Eastern fiat, bomb war, whatever you want to call it. More money for bonds, more debts, higher oil price. 71 is equivalent to what we're seeing back in Liberation Day. I talked about yesterday with the NASDAQ volatility hitting 51. Pretty extraordinary move. Is volatility going to drive the price continue higher, or is it consolidating in a range? That's the question. But it has knock-on effects into other asset classes. Obviously, with volatility clustering in oil, we can expect to see volatility now pick up in other asset classes, potentially, whether that's equities, gold, even U.S. Treasuries, which seem the move index move down. But I would expect to see it in Bitcoin. Volatility really kind of leading the way. If we're going to have a pullback in other higher beta trades, maybe this is setting up for what Bitcoin is telling us happens in July as a buying opportunity. We go into some of this geopolitical nonsense clickbait theater. It does spike volatility, and potentially Bitcoin trying to hold on here to its bullish trend above 99,000. Lots of them still has tested its trade strategy here yesterday. Its bullish trade was 105 and it broke that. So see if it can rebound. But back to energy for a second and OVX. Like, we've seen massive moves here now in all commodity space in the last month. Silver's up 15% in the last month, 27% year to date. Uranium's up even more than that. Natural gas, 12% in the last month. Brent oil, which is the world oil price, 18%. But all these things, alongside copper up 20% in the last couple of months, present the opportunity that is coming for commodity space. Is the energy constraint that is the supply of servicing all this AI infrastructure, all the big build out that's needed for the digital commodity money, aka Bitcoin. That's going to need lots of energy. The biggest opportunities are companies in the nuclear, obviously uranium miners, obviously natural gas. Those are the real cheap sources of energy that are reliable and efficient that's going to be needed. Right now, like, AI is consuming the equivalent of the country of Netherlands annually in its energy consumption. And it's going to continue to grow. That's going to be the biggest constraint on scaling this technology, which I think is potentially bigger than the internet and what it means to the revolution of society, particularly in the Western world as we adapt. So I'm very bullish on commodities, particularly in the energy space, as I am the AI themes. Yesterday, stablecoin vote passed in Senate, the Genius Act, 68-30, overwhelming bipartisan support. Treasury Secretary bested out, trying to say, like, this market could grow to be 3.3 trillion in the next couple of years. Looking at the T-bill options, the short-term U.S. Treasuries, less than 90 days. These stable coins will be forced to own them. They will be the bigger buyers than that than now even money market funds. JP Morgan now even saying they're going to jump on the stablecoin bandwagon. The Amazon of China, JD, they're out saying they're looking for licenses to attack this market. Keep paying attention to the Lightning Network, and my play there, like I keep talking about, is this LQWD. Have a great day. We will see you tomorrow.